In today's video, we're going to look through the main market and then we're going to look through the crypto market. There's a lot happening and it's really important to know the structural levels. Okay, let's run the numbers. In the main markets, in the past trading session, all sectors were up 0.94%. Energy was the worst performing sector, real estate was the best performing sector. We can see broad-based losses across the energy and gas, oil and gas, energy sectors. Google did quite well, Amazon well, Microsoft well, and Nvidia did a fantastic bounce. People lose money inside financial markets because they only focus on the charts that they trade and invest in. They don't understand the market pulse. They don't even look for it. They're not sure what CTKS structure is. Instead, they just use retail support and resistance levels drawn from recent indicative price. And there's a lot of stories around those lines. Unfortunately, those stories will lose you money. Instead, professionals embrace price reality, always managing their risk with three-dimensional risk management. On the red days, retail sells, it gets really freaked out, and it buys on the green. Professionals do the exact opposite. To be more of a financial and emotional blessing to yourself and those you love, it's really important to think professionally. This can be quite difficult to do at the start. The best way to get into it is to understand the Tier 1 charts. They are the engine of financial markets globally. Then cross-compare those to the Tier 2 and Tier 3 charts. I help people do this inside the service. What you want to focus on are the total market structural levels of these particular charts. That is called CTKS Structure. Thank you everyone for tuning in. I really appreciate you being here and sharing this time together. There are a lot of scammers out there, and as the markets start to hot up, they're coming out of the woodwork. Please note that I will never ever manage your funds on your behalf. I'm against that. Your learning is your earning, and the only things I'm involved with are on the About page on YouTube. In the past trading session, we saw the fear gauge of the market absolutely crumble down as junk bonds were exploding. Junk bonds are a really good indicator. I say it a lot, but a lot of people don't understand how good junk bonds are. We saw the Nasdaq absolutely rally. This is bringing back risk-on sentiment. That was further facilitated by oil prices coming down, which are largely inflationary. This creates deflationary pressure. That's what the Fed is looking for, energy prices to come down. We also saw yields come down, bond prices skyrocket, the DXY break down. But gold isn't doing much, and if you understand the CTKS method and you've marked up gold, you know exactly why. Why is that? There is so much structural resistance above these levels. Gold is having a hard time getting through it. CTKS structure overrides. When we look structurally through the CTKS method at the S&P 500, structural analysis involves marking up all of price history. With the S&P 500, that's over 55,000 days worth of data. What we saw was that there were very, very solid structural support levels from 4108 below. We saw that the S&P 500 came down to these levels and bounced, and boy did it bounce. Right now we're encountering a structural resistance level at 4372. The markets are wildly positive. As I mentioned inside the service, when we did an analysis on gold, when you get wildly positive months, pay attention to that positive path. I also want to let the service members know that the SPX upper boundaries have been updated. There were a few questions from service members. If you see December in the particular description, that's an updated one. Just look out for the December ones. We know that no alt can escape Bitcoin's gravity, and we need to look at crypto even if we're not trading or investing in it, because it's just like junk bonds. It's a phenomenal risk-on or risk-off sentiment indicator. Bitcoin was repairing, flagging the fact that the S&P was likely to bounce when it was coming down like a brick. But it was coming down like a brick into structural support levels, and a lot of them. That's why, for over a week, I was explaining that the main markets could definitely bounce. When we look at Bitcoin, Bitcoin has been constrained because there's so much structural overhead resistance as identified through the CTKS method. This structural resistance is going to be hard for Bitcoin to break through. That's why it's just skimming along the top of that particular price action. That explains this. And if you're a service member, the three-dimensional risk management paths that predict price were pretty much spot on with the positive price of Bitcoin in last month. The blue line is Bitcoin's gravity. That's Bitcoin's price action. You can see Ethereum moves with Bitcoin. Also, BNB moves with Bitcoin. XRP does. You might think Solana doesn't, but it actually does. When you zoom in here, the price appreciation on Solana was up to 60%, but the service members know that there was a lot of overhead resistance just creeping in here after a positive fresh air gap. That's why, as a community, we definitely buy on red and we sell on green. This puts the percentages and the risk in our favor. A lot of people would have FOMO'd into Solana as it pulled back, and this is quite a significant pullback. I'll go into Solana's chart because that's been updated inside the service. We can see that Doge has not really gained that much traction at the moment. ADA has been doing well, XRP as well. Tron is starting to come down. Structural levels are everything inside the market. Price literally moves between them. In yesterday's video, I was just explaining that the potential for negative price momentum was definitely there. The indicator that I'm going to pop on comes from the CTKS method monthly service. What it shows us is where the structure is inside the market. Based on over 5,100 days of data analysis, we could see there was a structural support level at that 34,430 odd mark. And when we look at this particular structural support level turning into structural resistance and then back to structural support, this is very good for Bitcoin. This indicates that from here we'll try to make a play upwards across the weekend to the next structural resistance level at 35,184. So just keep this in mind. These structural levels act as safety nets. They're not brick walls, they're elastic. They can get pushed under and then flung back. And that's what we're all about. One thing that you'll note, if this particular structural level does not hold, we have a big fresh air gap, a negative fresh air gap underneath Bitcoin's price. You can see just how far down the next structural support level is at 31,816. This is exactly why we do three-dimensional risk management, and you can see how important this structural level of support actually was. If this wasn't here, Bitcoin could have moved down very quickly and very rapidly and caught so many people off guard because they simply wouldn't know it's there. We know it's there because we've run the numbers. Let's have a quick look through the crypto market to identify what's hot and what's not. What we can see right off the bat is Rune is doing really well. The graph is also doing well. LDO is starting to come up. And Blur in NFTs is looking good. Looking across the DeFi space, LDO, Curve, GMX, LRC, CVX, you can see there are a number of cryptos doing quite well at the current time. Not much is happening in the meme space. Inside blockchain infrastructure, the graph is going for it. In CeFi, not much happening. The AI plays in blockchain services are looking pretty good. AGIX, FET Engine, WorldCoin, Ocean. The AI sector could definitely hot up. As far as social, only the tiny ones are coming up at the current time. In GameFi, ILV, Illuvium, and GMT, Steppen are looking pretty cool. In the NFT, Blur is going ape. It looks really good. In chain, Solana has been doing very well, but price moves in waves. It always needs to retrace. We can see Rune is outstanding. Arbitrum not doing too badly. Neo and Optimism doing nicely as well. When you're doing your market scans, it's really good to look at the different groups to see what's hot and what's not. Price is always moving in a wave. Solana has been outstanding recently. When an outstanding move retraces, it retraces harshly. This is something that you want to bear in mind. The greatest gainers in the past 24 hours, top 100, Rune, Rose, Trust Wallet, Arbitrum, Neo, LDO, The Graph, GMX, and CRV. The greatest losers, top 100, Cake, Flow, Arweave, Solana, Filecoin, Near, Ape, NFT, HT, and BTT. Over the past 24 hours, there's been over $90 million in total liquidations, 60 of which has been long. When the longs get liquidated, they have this green color, which means the price is going down. When you see red, it means the price is going up. When we look across the 12-hour, we can see quite a few shorts got actually hammered. Looking across the past 4 hours, the shorts are going the way, and wow, and the past hour, the shorts are getting whacked. Unfortunately, there's ever increasing scamming activity. Scammers impersonate all growing and large YouTube and Twitter and social media channel personalities. They'll impersonate anyone. They're always the same. They say, give me your money and I'll make it double or triple or whatever. Please don't fall for those lies. What you need to do is you need to learn to do it yourself. There are no shortcuts. If you try the shortcut will cut you. Instead, focus on your learning. And if you're ever wondering if I'm involved in anything, I'm only involved in the links on the description of the YouTube About channel. Understanding price reality is what the greatest names of trading and investing have done throughout the centuries. When you look at the structural levels of Solana, we saw increasing levels of structural resistance playing into Solana's price chart. When this occurs, price tends to slow down. If it can't get above it and turn it to support, it will fall down to the next structural level. And that's actually what we saw. This 39.20 mark is really important for Solana's price history and price action. If Solana keeps on maintaining this, and we've seen Bitcoin fall down to a similar level, we would expect Solana to try to start attacking this 42.16 mark. If it doesn't get above, it's going below. Price action is so easy to understand when you know where the structural levels are. If it's not going above, it's going below. That's it. That's as simple as it gets. But you need to know what you're doing. And if you understand that we mark up all of price history with the CTKS method, which reveals that CTKS structure, it's just a godsend. You don't have to panic where price could be going. You know structurally it's either going up here to this 42 mark or it's coming down to the 33 mark. It's that simple. And you just look at the structure. Do we have crossovers? Tick. Do we have a degree of consolidation? Tick. What is Bitcoin doing? Well, it's bouncing from structural support. Tick. The probabilities are weighting themselves towards a rally up to the 42 mark. But what if that doesn't happen? We're prepared because we have three-dimensional risk management. We know if it doesn't go above, it's going below. And so we just keep our eyes on what price is actually doing. Price is simply moving from structural level to structural level in a wave function. The prospects for Solana are phenomenal. You can learn the CTKS method for yourself by going to ctksmethod.org, going through the standard certification process, or you can be like the elite members of the CTKS method service, and you can get the indicators that I show you each and every day. But of course, I just zoom in. You'll be able to zoom out and see the three-dimensional risk management paths. Each video explains where price is going for the coming month. And there are videos for all the Tier 1, Tier 2, and Tier 3 charts. This month we have a special edition, the Aussie dollar. The CTKS method is the world's most powerful smart money buy and sell level detection system, and I'm currently offering several partial Level 1 and Level 2 standard certification scholarships. When you complete Level 1 and Level 2 standard certification, you will get a certificate. The markets are always trying to desynchronize you. They're always trying to pull you in after a number of green days, instead of getting pulled in on a number of red days and positioning yourself to work within CTKS structure. That's why understanding where the structure is and understanding that you control the trade or investment, but the market controls the return. And price is always moving in a wave function between structural support and resistance levels. Financial markets are not some alien life form. They obey the same rules as everything else in life. Your work, your relationships, your friendships, you have to put in the work. If you don't know what you're doing, you will simply lose money. If you give your money to other people to manage, you will lose money. If you chase the 1,000 to X, million to X, risk plays, you'll probably end up losing your money. You might be lucky, you might make some, but you didn't earn it. And therefore, it can be lost very, very quickly. In life, it's like this. If you go to work and you do really well because you've studied hard, you know what you're doing, you're going to get rewarded for it. It's the same inside financial markets. Inside financial markets, you will suffer losses. Nobody can prevent them. That's the market teaching you a very important lesson. The market just simply says, hey, don't do this. You can say, shut up market, I'm not listening to you, and you'll keep on losing money because of it. Or you can say, hey, ouch, that really hurt. The market is teaching me a lesson from this loss, or a lesson. I need to pay attention to this. I need to create a rule. That's why we either win or learn and never blame. If we blame, we don't learn. If we blame, we continue to lose. Always know that the universe wants you to succeed. It wants you to be wildly successful. But it requires certain things of you. You must put in the work. You must be dedicated and committed. And above all, you must learn. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.